Gold. What a solid investment, am I right? How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today we are talking about gold. And yes, gold, the metal, the fanciness. Gold is a very interesting investment. So I figured I'd make a video about it, telling you guys about what I think of gold and how gold really works as an investment vehicle. So just a basic history lesson, the US dollar used to be backed by gold and used to be on a gold standard where each dollar sort of represented a fraction of a piece of gold that was held by a bank. And now we are not on a gold standard, we are a fiat currency, which means our currency is worth whatever people think it's worth. So yeah, that's like where gold comes from. It used to be held by banks to value the dollar, but now it's just held by banks to sort of hold value, I guess. So let's just hop right into some pros and cons of gold. All right, so we're gonna start with the pros. So first pro of gold is that it holds value with inflation. All right, so it holds value with inflation. So as inflation goes up, the value of gold also goes up, and they sort of stay, at least they stay together. So your gold is not gonna be losing value faster than inflation is going up, which is good because if you keep your money in the bank, you are going to be outpaced by inflation and your money is going to be losing value over time. But if you do have that gold, you're gonna be able to keep up with inflation and possibly even outperform inflation over time. Next, gold balances out your other investment vehicles. So what I mean by this is when the value of stocks and bonds goes up, the value of gold usually goes down and vice versa. So if your stock investments are losing value, your gold is usually going to be increasing in value because people are going to be worried that, oh my gosh, the stock market is crashing, I need to sell all my investments and put all my money in gold and hide it all in the basement. So that's going to drive the price of gold up when stock prices fall, and vice versa. When people think the stock market is booming, they're going to sell their gold and buy stocks instead. So that's generally where that up and down comes from. And it also balances out the value of the dollar. So as the value of the dollar goes up, the value of gold actually goes down, and vice versa again. And this is sort of for the same reason. When people fear bad economic times, they sort of flee to gold. For going to our next thing is a feeling of security. So a lot of people will sort of feel safer when they actually have this tangible asset that they can hold on to and be like, okay, I have this gold, I know it's worth something. If the nuclear apocalypse happens, I'll still have this gold and I'll be able to exchange it for some goods and services or something, I don't know. But it has that like feeling of security and that feeling of, okay, this is a tangible thing that I have that is worth money. And if something does go wrong, if the stock market crashes, I know I still have this to hold on to and to give me some value. And going back to the balancing thing, during the recession in 2008, stocks fell on average 37%, and during the same time period, gold rose by about 5%. So that sort of illustrates that even when the stock market was falling and no one was having a good time economically, gold was still staying strong, and people were sort of fleeing to gold for that sense of security and for that reassurance that they still have something, even though everything else is going pretty poorly. And lastly, the last pro of gold is that diversification. So when you're investing, you want to make sure that you're investing in a diverse range of investments. These can be like stocks, bonds, and then just commodities like gold. So it's good to have a balance so that you're not putting all your eggs in one basket, and if the stock market crashes, you're down on all your money. You still have gold and bonds and stuff to like balance out all of the volatility that you experience with different asset classes. All right, now let's talk some cons. So gold generally appreciates at about half the rate of stocks. So because gold rises at a much slower pace than stocks, a lot of people are going to see this as a less, less desirable investment because they're not going to be making a higher return on their money because gold is less volatile than stocks and it's very stable growth as opposed to stocks, which are more up and down. But generally, gold returns at about a 5% rate and stocks are about a 10% rate. And next con is sort of what determines the value of gold. Why would the value of gold increase over time? Like with stocks, you're investing in a company and that's because you think this company is going to do well in the future and you really believe in their company. But with gold, what are you investing in? What is your purpose in investing in gold? It's a rare metal, it's shiny, but what value, what intrinsic value does gold have that owning part of a company has? That's my concern with gold. What are you actually investing in? I think a lot of people don't think about this and they just see, oh, gold, that's valuable, right? That's a shiny thing. That's been valuable over time. So I think if I invest in that, that'll be fine. But what are you actually investing in? Next thing is storage and insurance and theft. So really just the logistics behind gold. So if you have tangible gold, where are you gonna put that so that it's safe and not in danger of getting stolen or getting, I don't know, rusty? But just the logistics behind it. And insurance, if you're gonna insure your gold, that's gonna cost money. That's gonna cut into any appreciation that happens with your gold, if there is any. And then theft, so if you have this tangible asset that is just there and available to be stolen, there is always going to be that risk that isn't always as present with a digital investment, even though a digital investment can still be stolen through hacks and stuff. But if you have that tangible thing, there's a much greater chance of something happening there. And lastly, gold is not actually very useful anymore. And that's because it's really just used for jewelry for the most part. It doesn't back the dollar or anything. I just question the intrinsic value of gold at this point because it seems like it's really only used to either hold wealth or to make jewelry. And if those are its only two purposes, I don't see how it can really function as a solid investment vehicle if that is all it is being used for. All right, so how do you do it? How do you invest in gold? What do you do to get yourself some gold? So the first thing you can do is buy bullion. And bullion is physical gold, having a gold bar, or owning a couple ounces of gold or something. So that's bullion. That is what bullion investing is. It is getting physical gold and holding on to that over time or keeping it in a bank safe or something like that. And bullion also includes gold coins, which are less expensive than getting a bar of gold, and still good for getting that investment into gold if that is something that you're looking to do. Next, sort of related, is jewelry. So if you get yourself some gold jewelry, that's another way for you to invest in gold. If you put that away somewhere, keeping it safe and such, that is another good way for you to get exposed to some gold investing. Next, we're going to move away from the tangible and move more to the sort of investing side of things. So you can get some stocks. And usually if you want stocks that are exposed to gold, you're going to have to go for some gold mining stocks of mining companies, because what other companies are you going to invest in that are based in gold? Maybe a jeweler, but I don't think that's going to get you the exposure that you want if you're trying to get invested in gold. Next, you can get a gold mutual fund. So a gold mutual fund is a mutual fund that tracks the value of gold And if gold prices rise, the mutual fund gets like more valuable, and if gold prices fall, it's going to decrease in value. And again, with mutual funds, they're going to have that expense ratio, so watch out for that. And lastly, we've got gold ETFs, which again are going to be very similar to mutual funds. They're going to be a collection of stocks and other assets that represent gold, and those are going to have, again, the lower expense ratio, and they're going to be passively managed, and those are good sort of set it and forget it investment if you just want to get some exposure to gold and you don't want to hold on to bullion and you just want that diversification without having to hold on to something tangible and figure out all the logistics for that. So for me, the bottom line with gold is I just feel like there are better ways for you to invest your money and better things to spend your money on than investing in gold. So some examples of this, first off, paying off any debt. So debt should be your number one priority. If you are in debt, if you are in credit card debt, if you are in high interest debt, pay that off immediately. Don't even think about investing, let alone investing in gold. Get that debt gone before you worry about anything else. Next, after you get that debt gone, you should get an emergency fund. And this is going to be something that's going to be able to cover your expenses for ideally 6 months, but at the very least 3 months of your monthly expenses to be in a savings account that you are not using for anything else. You're just leaving that there for a rainy day or for something that bad happens. So just keep that emergency fund. That's your step 2. Step 3 is if you get past those 2 steps and you still want to, if you still have some money left over that you want to put to work, you should invest in something that you know a lot about, or at least you know a little bit about, and something that you understand. So invest in stuff that you know about. Invest in stuff that is meaningful to you, because at the end of the day, if you're not mentally invested, if you're physically invested in something, but you're not mentally invested in that idea or whatever your money is behind, and something, and that investment like drops in value a little bit, you're much more likely to sell out if you're not if you don't actually care about where that money is and what you're invested in, than if you're invested in something that you care about and something that you know about. So really do your homework before you choose any investment, and just make sure it's something that you're knowledgeable about and something that you really care about before you put any money there. So that's about it for the video, guys. Just sort of wanted to give you guys a rundown on gold and how to invest in gold, why you might want to invest in gold, why you might want to stay away from gold, and just the basics of gold. And for our question of the day, do you plan on investing in gold anytime in the future? Is it something you're interested in? Something you would feel more secure about owning than, like, say, a stock or a bond? If so, drop that in the comments below. If not, let me know why. And if you enjoyed, please leave a like and subscribe to be notified whenever I put out another video. And until next time.